Hi everyone, Assalamu alaikum. As you all are aware that 26th October 2022, Government of UAE Federal Tax Authority has issued Federal Decree Law number 18 of 2022 and which amend Federal Decree Law number 8 of 2017. There is actually 15 clauses article number is there which has been amended by this new federal decree law number 18 of 2022, and this is the new decree law fully amended one, and we can read this full, and this one old one federal decree law number 8 of 2017. I made some summary of all the changes which has been made, and we will discuss all those changes one by one. Okay, let's start. This amendment will be effective from 1st January 2023, not from today, not from tomorrow. This will be effected from 1st January 2023, from the new year. Okay, now come to first amendment, article number 7, supply in special cases. In old decree law, there is no provision. New provision has been added. Sub article number 2. Any other supply specified in the executive regulation of this decree law. Okay, what they're trying to do, the amendment has added a new clause wherein the executive regulation may stipulate any supplies that are explicitly not considered as a supply other than the supply of voucher or transfer of the business as a going concern. Before Article 7, what is Article 7? Let's see here. Article 7 is about supply in a special case as an exception to what is stated in Article 5 and 6. Supply of goods and supply of services of this decree law, the following shall not be considered supply. Okay, these things will not be considered as supply. Now one point has been added, any other supply means executive regulation can specify any other supply as not a supply, means power has been given to the executive regulations, they can now specify. Now come to the next amendment is under article number 15, registration exception. This was the old provisions. Okay, now come what old provisions say. Let's discuss that, and with that also, the authority may accept a taxable person from a mandatory registration upon his request if his supplies are only subject to the zero rated. Point number two, anyone exempted from tax registration according to the subclause clause 1 of this article shall inform to the authority of any changes to his business that would make him subject to the tax under this decree law pursuant to the time limit and procedure determined in the executive regulation of this decree law. Point number 3, authority shall have the right to collect any due tax and administrative penalty for the period of exception where that taxable person was not entitled for to exception. New provisions say the authority may accept a taxable person from mandatory. They deleted the mandatory word. The authority may accept a taxable person from a tax registration upon a registrant, whether a registrant or not. Upon his request, if his supplies are only subject to the zero rated. Before this was the mandatory tax registration. Now any kind of registration, whether they are registrant or not, authority can, on the request of the supplier, they can exempt them from registration. Point number 2, whether any changes, any kind of changes before the only tax related changes, if they are making them any uh, subject to the taxable in the future, only those kind of information was required. Now any changes, whether any changes in the business of the taxable person accepted from tax registration according to clause 1 of this article result or may result in the absence of reason based on which the taxable person was accepted, the taxable person shall inform to the authority of such changes within the time limit and pursuant to the procedure determined by the executive regulation of this decree law. Authority shall have the right to collect any due tax, administrative penalties for the period during which the taxable person was accepted, whether it is established where it is established that the taxable person was not entitled to the exception. What all this amendment means? The exception from VAT registration shall now apply to person already registered with the FTA, in addition to the non-registered person. Now registered or both unregistered can apply for this one. Further, the accepted person now would be obliged to inform the authority of any changes in his business which are likely to occur as well, which are likely to occur for the future transaction also. Okay, they have to inform to the FTA. Now come to the article number 21, tax deregistration cases. Before, the law was a registrant shall apply to the authority for the tax registration in any of the following cases. If he stops making taxable supplies, if the value of taxable supplies made over a period of 12 consecutive months is less than the voluntarily registration threshold, and said registration does not meet the conditions stipulated in clause 2 of article 17 of decree law. What was the clause 2 of article 17 before? Let's see. Article 2 was at any time that he anticipates that total value of supplies stipulated in Article 19 of this decree law or expenses which are subject to tax shall be that will be incurred will exceed the voluntary registration threshold during the coming 30 days. Article 17 this say, okay. Article 19 calculating tax registration threshold limit. Okay, and this is talking about next 30 days with the time of VAT registration. Okay, now new provisions say a registrant shall apply to the authority for the tax deregistration in any of the following cases. If he stopped making taxable supplies, same as before. If the value of taxable supplies made over a period of 12 consecutive periods less than voluntary tax registration threshold, and said registrant does not meet the clause condition stipulated in clause 2 of article 17 of the decree law, same as before. Now they added point number 2, 3 new. In point number 2, what they say, the authority may, in accordance with the control and conditions specified in the executive regulation of this decree law, issue a tax deregistration decision if the authority finds that continuity of such tax registration may prejudice the integrity of the tax system. Now power has been given to the authority. They can by their own will can deregister your company if they think your registration is a prejudice to the integrity of the tax system. What point number 3 says, tax deregistration shall not result in relinquishment of authority right to claim any due tax and administrative penalty. It does not mean if they have deregistered, you are exempted from the tax liability of yourself. Okay. Now, this amendment gives power to the FTA that I already said to you, to the deregister any taxable person in certain circumstances to protect the tax system. Okay, further, the amendment carves way for the tax authority to collect any tax dues or penalties of, even after the deregistration. It does not mean they deregistered you, you are now safe from your fine and penalties. Now come to article number 26. Article number 26 was date of supply in special cases. What was old law before? The date of supply of goods or services for any contract that include periodic payments or consecutive invoices shall be earliest of any of the following dates, provided that it does not exceed 1 year from the date of provision of such goods and services. What was the in the case of continuity services, like we are repeatedly giving services and issuing invoices and getting payments? What should be the date of supply? First, A, the date of issuance of any tax invoice, earliest of any of three following. The date of payment, the date of receipt of payment. Now, what in new law, what they changes, they deleted the provided that this point from here and added that here. If after the expiry of 1 year, if you still these three conditions have not met, what will be your date of supply in such cases? The date of expiration of 1 year from the date the goods and services was provided. Okay, I hope point article 26 is clear now. Come to the article number 27, place of supply of goods and services. Okay, they have added some of the provisions. We will discuss all those provisions. Now they added sub article number 3 and 4, clause 3 and 4 we can say. In clause 3, the place of supply of goods that includes export and import shall be as follow. Inside the state, inside the UAE, in the following cases. Clause 1 of Article 26 of this decree law applies and ownership of the goods is transferred in the state. Article 26, Clause 1. Let's see. Article number 26. Date of supply in special cases. Date of supply of goods or services for any contract that includes periodical payments for consecutive invoices are issued. Okay, same point before. Uh, If the clause 1 of the article 26 of this decree law applies and ownership of goods is transferred in the state, what they are trying to say in article 26, the amendment added a clause to state that the place of supply of goods for the supplies made under article 26 clause 1 of the VAT law shall be in the UAE if the ownership of imported or exported goods has been transferred in the UAE. Place of supply will be the UAE. This may have an impact on overseas suppliers selling the goods under Article 26 Clause 1 in the UAE, wherein the ownership is transferred in the UAE mainland, even though the due VAT has been paid once at the time of import. You know, when we import any goods at the time under VAT box number 6 and 10, we pay the VAT and we claim the ITC in point box number 10 itself. Now in this case, continue of the services or goods, okay, plus ownership is transferred in the UAE. In that scenario, the place of supply will be considered as in the UAE. Okay, I hope this point is clear. Now come to the article number 33, agent. Before law was, the place of residence of an agent shall be regarded as a place of residence of principal in the following two cases: if the agent regularly exercised the right of negotiation and entered into agreement in the favor of principal, and point number two, if the agent maintains a stock of goods to fulfill the supply of agreement for the principal regularly. Before means agent was in Dubai, principal was in India. Then place of resident will be principal, that is the equal to the wherever is the principal is situated. Place of resident of an agent shall be regarded as the place of resident of the principal. What will be the place of resident of an agent shall be regarded as the place of resident of the principal in the following cases. The amendment interchanges the word principal and agent. Post the amendment, the place of resident of the principal shall be the place of resident of the agent in the cases defined thereunder. Now, the place of resident of the principal shall be uh, before. Sorry for confusion. The amendment interchanges the word principal and agent. Post the amendment, before the amendment, the place of resident of principal shall be the place of resident of the agent in the cases defined thereunder. Now they interchange the words. Okay. Now come to the article number 36, value of the supply and deemed supply. Before the value of article 36, article number 36 talk about value of supply. Let's see. Article number 6, value of supply for the related parties. Okay, what should be the value? Okay, now what they did, they added here article 34, 35, and they have added now article number 37 as well. Article number 37 regarding the value of deemed supply. Now the value of deemed supply is also included here. It what will affect here by the virtue of this amendment in the article 36, which concern determining the value of supply in cases of related parties. Market value now would need to be determined for the deemed supply between the related party as well, when the recipient does not have the right to recover the full ITC. Now, what they did, they have added Article 37 here, value of supplies as well. What should be the value? Value should be the market value. Okay. Now come to the Article 45, supply of goods and services that are subject to the zero rated. What they did, Article 45, there is a supply of air, sea, land, means of transport and transportation of passenger goods. Okay, supply and services related to the means of transport mentioned clause 4. Okay, aircraft, vessel, air rescue assistance, airship, crude oil, natural gas, supply of preventing basic healthcare services, related services. What they did, they added the words import. Now supply will and supply in the UAE and import, this both will be covered now. Okay, import of concerned goods, import of concerned goods, they have added in article 45. Zero rate, this services was already zero rated, now its import will also be considered as a zero rated. Next article number is 48, reverse charge mechanism. uh, Reverse charge mechanism was applying on the crude oils. Let me read the law fully for the better understanding. Okay, old provision was, if a registrant make a taxable supply in the state to another registrant, TRN to TRN, any crude or refined oil, unprocessed or processed natural gas, or any hydrocarbon. Here is the amendment. Any hydrocarbon was before. Now they changes it into the pure hydrocarbon. This is the only changes, and here before that shall not charge tax. Here now they amended it to shall not account for the tax. Okay, before there is one more amendment. Before it was a just written confirmation should be taken. Now they deleted the confirmation into declaration. Okay, or use for production or distribution of any form of energy, they have added this one as well. Okay, pure hydrocarbon, they have added, deleted any hydrocarbon into, now they made a pure hydrocarbon. Cabinet may issue a decision specifying other goods or services that are subject to the reverse charge and specifying the relevant condition and provisions. Okay, the amendment specified that reverse charge will apply to only pure hydrocarbon. Before it was any kind of hydrocarbon. Only instead of any hydrocarbon. Pure hydrocarbons are defined under Article 1 as any of the various pure compound of chemical formula consisting solely of hydrogen plus carbon. Further amendment in clause 8 gives the right to the cabinet to introduce any other goods or services to be subject to the reverse charge mechanism. They can bring new goods and services under RCM. Now come to the article number 55. Recovery of recoverable ITC in the tax period. Okay, this was a very interesting. Let's read it. Read it out. Taking into consideration the provisions of Article 56 of the Decree Law, recoverable ITC may be deducted through tax return relating to the first tax period in which the following condition has been met. First tax period in which the following condition has been met. The taxed person receives and keeps the tax invoice as per the provision of the decree law, provided that the tax invoice include the details of the supply related to the such input tax or keeps any other document pursuant to the clause 3 of the article 65 of this decree law in relation to the supply or import on which input VAT was paid. They have amended in the new provision wise. Taking into consideration the provisions of Article 56 of Decree Law, recoverable ITC may be deducted through the tax return relating to the first tax period in which the following two conditions has been satisfied. If any of the following cases has occurred, the taxable person receives and retain the tax invoice as per the provision of decree law, provided that the tax invoice include the details of supplies related to the such input tax or keep any other document pursuant to the clause 3 of the article 65 of the decree law in relation to the supply on which input tax was paid. In import, we generally don't pay the tax. The taxable person imports the goods and services and retains invoices and import declaration in accordance with the provision of this decree law and executive regulation in relation to the import in which the input tax was paid or declared. Custom declaration form, exit reports, these are the necessary. Point number three, the taxed person imports the services and receives and retains the invoices in accordance with the provisions of the decree law and its executive regulation in relation to the importation which input tax was declared. The amendment explicitly mentioned that government entitles can uh, government as you know in this amendment uh, charitable weekend. This amendment add two clauses to Article 55 regarding the recovery of input VAT, which specify the requirement to keep record to recover the VAT paid or declared on the import of goods and services. The amendment specify the reverse. Now come to the Article 55. Okay, cabinet decision shall be issued at the suggestion of the minister determining the government entities and charitable entitles to recover the full amount of input as paid by them except tax excluded from the recovery as specified in the executive regulation of the decree law and tax paid for goods and services used to perform exempt services. Now what they have changed this, they have added some of these points what they are trying to say without prejudice new provisions without prejudice to the general provisions of input tax recovery government entities. Let me tell you the summary of this one. Now this amendment saying mention that government entities can recover ITC that is incurred while performing There are sovereign activities like printing the currency notes, what such kind of activities. Also, charitable organization they have also added. Okay, charitable organization can recover ITC that is incurred for the provision of relevant charitable activities defined under Article 1 as an activity for the purpose other than profit or benefit to any proprietor, member, shareholder, or of the charity, which is undertaken by the charity in the course or furtherance of its charitable purpose. Such kind of ITCs they can also recover. Article 61 Instances and condition for output tax adjustment. And now, before law was that a registrant shall adjust output tax after the date of supply if any of the following instances. If the tax was charged in error. Now they change into if the tax was charged or tax treatment was applied in error. They can now reduce the tax. They can issue the credit notes. Okay, they have added this one. Under Article number 6, the amendment expands the scope of Article 61 to include tax treatment applied incorrectly to adjust the output tax after the date of supply. This is the amendment. Now they can, if they apply the tax treatment wrongly, then still they can apply the tax adjustment. Under Article number 62, mechanism for output tax adjustment. Now, before it was, if the output tax calculated by the registrant exceeds the output tax which has been charged the supply, the registrant shall issue a tax credit note according to the provision of this decree law. Now, new provision, if the output tax calculated by the registrant exceed the output tax which has been charged on the supply, the registrant shall issue a tax credit note according to the provision of this decree law within 14 days from the date on which the situation provided for the clause 1 of article 61 of this decree law took place. Summary: the amendment now places a condition that taxable person must issue a tax credit note within 14 days from the date on which any of the instances provided in Article 1 occurs. Article 1 of Article 61, Clause 1 occurs. See Article 61. Article 61, Clause 1, this one. The registrant shall adjust output tax after the date of supply if any of the following instances. If the supply was cancelled, if the tax treatment of the supply has changed due to a change in the nature of the supply, if the previously agreed consideration for the supply was altered, if the recipient of the goods and recipient services return them to the registrant in full or in part, and the consideration was returned in full or part. If the tax was charged in error. Okay. Now they have, if such kind of the cases within the 14 days of this kind of scenario happen, they have to issue tax credit note within 14 days, not after that. Okay, now come to the next amendment. Amendment Article 67, date of issue of tax invoices. Before it was the registrant shall issue a tax invoice within a 14 days as of the date of supply. Now, new provisions, the registrant shall issue a tax invoice within a 14 days as of the date of supply as stated in Article 25, Article 26. Okay. Now they have added Article 26 as well. Let's see the what is Article 26. What we can see here. Article say date of supply in special cases. What should be the date of supply? From date of supply is happen from that 14 days you have to issue the tax invoice. Now they have added clause 2. Article regulation of this decree law shall determine, they are giving the power to the executive regulation, shall determine the cases that are subject to periods other than specified in clause 1 of this article or cases in which the tax invoice has been shall be issued immediately in accordance with the control specified therein. Okay. They are giving power to the executive regulations. Amendment places a condition that tax invoice shall be issued within a 14 days from the date of supply for the supplies made under Article 26. Supply, supply of goods or services under any contract that include periodical payment and consecutive invoices. Now come to the next amendment. This is a huge new article number added. Article number 79. This is very important in case of FTA audits. What they added, let me read out. There is total 8 points they have added. We will analyze one by one everything. Except in cases under clause 2367 of this article, the authority may not conduct a tax audit or issue a tax assessment to a taxable person after expiration of 5 years from the end of the relevant tax period. Except clause 2367, 2 here, 3 here, 6 here, and 7 here. Except this clause, authority shall not, may not, there is may not a may not a shall not. There is may not. The authority may not conduct a tax audit. This is the this is the will of authority. There is no mandatorization on the authority. They may not conduct a tax audit, issue a tax assessment to a taxable person after expiry of 5 years from the end of the relevant tax period. Now come to the clause 2. Clause 2 say authority may conduct a tax audit or issue a tax assessment to the taxable person after 5 years from the end of the relevant tax period if he has been notified of the commencement of such tax audit procedure before the expiry of 5 year period, provided that tax audit is completed or tax assessment is issued as the case may be within 4 years from the date of notification of the tax audit. If like tax audit has been started of the tax authority may conduct a tax audit or issue a tax assessment to a taxable person after 5 years from the end of the relevant period if he has been notified of the commencement of the tax audit. The he has been notified before the end of the 5 year, but tax audit has started or completed after the 5 year. Okay, the authority can do that, but authority has to complete within a 4 days from the date of notice of they have to complete the audit. Now come to the clause 3. Clause 3 say authority may conduct a tax audit or issue a tax assessment after expiry of 5 years from the end of the relevant tax period if such tax audit to tax assessment issuance related to the voluntary disclosure submitted in the fifth year from the end of the tax period, provided that tax audit is completed or tax assessment is issued as the case may be within 1 year from the date of submission of the voluntary disclosure. What's saying? Authority may conduct a tax audit or issue a tax assessment after the expiry of 5 years from the end of the relevant tax period if such tax audit or tax assessment issuance related to the voluntary disclosure submitted in the fifth year. If VD has been submitted in the fifth year, then tax audit can be done within the next 1 year of submission of the voluntary disclosure. Come to the clause 4. The cabinet may, according to the suggestion by the ministry, issue a decision to amend the period specified for the completion of the tax audit or issuance of the tax assessment as per the clause 2 or 3. Cabinet can, on the suggestion of the minister, can amend the tax period of clause 2 and 3. Now come to clause number 5. No BD may be submitted after the expiry of 5 years from the end of the relevant tax period. Clause 6, in the case of tax evasion, this is a very, very important clause, clause number 6, because here they are talking about tax evasion. If anyone done tax evasion, then authority can open their tax audit in the within the 15 year from the end of the relevant tax evasion occurred. They are giving more power to the authority. They are giving more 15 years. This is very big years, and the crime is very big. Tax evasion. If you are doing tax evasion, then authority can open your cases for 15 years, within the 15 years. In the case of tax registration failure as well, they can open